CEO is Elaine Ellingham, who has a rather long history, but otherwise with Richmont Mines for quite a little while of time as lead director, and also was involved with the near $1 billion acquisition of Alamos. Also wanted to mention too that as VSA Capital, Omai Gold Mines was my selection in January for the stock that I thought would have the best share price appreciation in the next 12 months. So I introduce you to Elaine Ellingham. Her stairs over there if you like.
Thanks. I think your stock's doing okay so far, right? Yeah, I thought so. Yeah, good afternoon. Yeah, we'll just talk about Omai. I hope some of you have been following some of the activities in Guyana. It's definitely been an active part of the world. And yes, Canada is a great jurisdiction. I've spent most of my life working on gold projects in Canada, but I have to say working in Guyana has been a sheer delight. And from a permitting perspective, you have to be a little more patient in Canada. In Guyana, there's such an enthusiasm towards bringing some of these large-scale mines into production that permitting is absolutely going to be fast-tracked. So we'll just jump in. I am going to make some forward-looking statements and talk about some exploration targets, so there's some obligatory cautionary language. So looking at Omai, it was a past-producing mine. In fact, when it was in production, it was the largest primary gold producer in South America. Produced 3.8 million ounces, averaged 300,000 ounces a year. That's a large mine. So we have been working on this for about 3.5 years. When we started, it had essentially no resources. And we have put out 3 43-101 resources since that time and have been drilling a good portion of that time, actually. And so we sit now with a resource of about 2 million ounces indicated, 2.3 million ounces inferred. So we did power through to a PEA early last year, and it was a baseline PEA. It was only on one of the 2 deposits. We have 2 orogenic deposits on the project, on the property. It did give us an NPV of about $560 million US, and a production of 1.84 million ounces over a 13-year mine life. This is just a beginning, and it's already very much in our rearview mirror. We've been drilling 20,000 meters since then, and we have 3 drills turning on the property currently, and we're putting out about 6,000 meters a month. So really good progress we're making. So we have 100% interest in the project, very simple ownership straight from the Guyanese government, and so we renewed that permit in April, so it's good for another 3 to 5 years. So there, you might ask, why was this mine shut? One of the things is, just briefly, it opened when the gold price was about $400 in 1993. And for those of you who are in the gold business or invested in gold in that time, the gold price started to sag, and in fact, it almost hit $300 during the time this mine operated. At the same time, that company had acquired the Rosabelle property, which is only 200 miles east in Suriname. And they decided that they would relocate the very large 20,000 ton per day mill from this property over there. So that was kind of the death knell for this project. For me, when I saw it, it was sort of the dream project for an exploration geologist, because you knew that the whole circumstances were such that they had not done any exploration to expand, even to look along strike of the deposit. So it's been, nothing's easy in business. However, the identification of additional resources at Omai has been fairly easy. Jason, my VP Ops, is down there. He might not completely agree, but it's come together quickly. It's been an adventure. So there are great advantages of a brownfields project. Obviously, we know what the recoveries were historically. We're looking at expansions, so extensions of the existing zones that were mined. So this was conventional milling. It was basically a 92% recovery, looking at about 32% from the gravity circuit. Going forward, we can expect very similar. So we'll look at the infrastructure in a minute, but I'll just mention that one of the purposes of us doing that PEA, it was a bit premature. We knew we still had a lot of drilling to do and expansion, but it allowed us to apply for an environmental permit, which is the road to an EIA, which is the road to your mining license. So given what we saw, we wanted to accelerate that process. So 6 months, less than 6 months after us filing that PEA with the government of Guyana, we in fact got our environmental permit, so we are now on the road to an EIA. So we're well funded. We did a $30 million financing in February, or $25 million financing. So we're sitting at about $30 million. As I said, we have 3 drills turning. So the catalyst over the next while is actually our drill results. And that's very much expanding our one deposit, our Wenot deposit, which is an open pit deposit. And basically we see a lot of potential, and I hope to be able to share with you why we're so excited about the expansion potential that we see. So we are in the Guyana Shield. For those of you who are invested in some of the other companies there, it is definitely one of the hot jurisdictions right now. There's been quite a bit of M&A at very premium prices. And I think it is partly that people realize that the government of Guyana very much wants to see these large-scale mines come into production. So Reunion was taken over by G Mining recently. That was probably the most prominent one that a lot of people were watching. It was a high profile, and they were basically acquired for about $800 million, or $650 million, I guess it was. I guess it depends if you speak US or Canadian, and for about $114 an ounce. We're currently trading at about $42 an ounce, and also I hope to share with you why Reunion, the Oko deposits are fairly remote. Ours has road access, and we believe much easier to redevelop this project. So when you look at Guyana, it is a shockingly a growth spot in the world right now. They discovered offshore oil in 2015, and the GDP growth last year alone was 43%. They're projecting that by 2027, the GDP per capita in Little Guyana is going to be the highest in the world. So it is a country in transition. Offshore oil is the mainstay, but it does not create jobs in the hinterland. And so the government remembers most of all when Omai was in production. Because when Omai was in production, there's a little graph at the bottom right there on the GDP, but that is the only time before the discovery of offshore oil that Guyana ever had a robust economy. And they remember that. It wasn't that long ago, and you can't find anyone in Guyana who does not know the Omai mine. So there's other gold projects, but this one is definitely in the hearts and souls of the government and people of Guyana. So road access. So you can see Georgetown up there at the top. That's the capital city. And Linden, we're about 165 kilometers from there. And basically, that's the road that's down to Brazil. And with all the offshore money coming in, the government has invested in turning that into a major trade route. And so they've started to pave it. It was always paved down to Linden. And interestingly, Linden is our closest town, only 42,000 people. But in fact, it's the second largest town in Guyana. The other interesting thing, the main business there is open pit bauxite mining that dates back to 1916. And it was discovered by a Canadian. So we are in good stead in Linden. It is where, when the mine was in production, 1,000 of the employees lived, 90% of them lived in Linden. So obviously that's the path forward as well. So we have 2 deposits. The Wenot deposit is a shear-hosted deposit, and just 400 meters away there's the Gilt Creek deposit, which is hosted by an intrusion. And they are both orogenic deposits, and those of you who know a lot of the Canadian greenstone belts, the orogenic deposits, typically large, long life, deep roots, very similar. So the Wenot deposit is where we focus most of our work. Historical mining on the Gilt Creek, the upper part produced 2.4 million ounces, and we have a resource below there of 1.8 million ounces. And the Wenot deposit, it historically produced about 1.4 million ounces, and we have 2.4 million ounces there. And that is where we have the 3 drills currently turning. So the top left, you're looking at the basic geology map, and there is a contact between the sediments in gray down below, and the green is the volcanics, typical greenstone belt, andesites, basalts, very similar to what you would see in Quebec. So all those red bodies, those are all the gold zones. And basically you have a very, very broad deformation zone that was reactivated multiple times. And as we all know, the gold fluids need roots to come through conduits in which to precipitate out the gold. So obviously this was a structure that had a lot of extensional features, a very, very robust deposit, in fact 2.5 kilometers long we've already identified. And then you can see the Gill Creek deposit just 400 meters away, and that's an intrusive deposit. So it's a little unique at Omai because a lot of gold deposits don't have a geophysics signature. So actually we're very fortunate. You can see at the bottom right, that's our magnetic survey, our airborne magnetic survey. And right in the middle there, you see the Wenot deposit, which is a mag high. So in fact, we have lots of other exploration targets, but when you're drilling 90,000 ounces of resource per hole, you kind of spend your money there. So we've focused on Wenot for now. So on the far left, that's a cross-section through the deposit. And I guess the takeaway here is there's not just one gold zone. A lot of gold deposits, they have one. So along that contact between the volcanics and the sediments, there is a very persistent quartz feldspar porphyry. You can see there we drilled 200 meters down below, running grades like 6.92 over 19 meters. So I mentioned that this would be an open pit deposit. That's the vision. But with grades like that, there is definitely the optionality for underground at some point, so you would always optimize the economics. The top right, that's a plan map looking down, just to reinforce the fact that there are multiple zones here, and you're looking at our block model there. The other takeaway there is a lot of our deposit actually is fairly shallow, because people think, oh, if you're at an old mine that was producing before, you're just drilling deep. That's only looking at about 100 meters down. And you can see even at that level, in the middle there, there's the old mined out pit. It was very small relative to what we're looking at already. When we started drilling deeper, at the bottom right there, down 300 to 450 meters, because we want to expand that resource now, you can see we started hitting really spectacular grades. Our most recent hole had 3 spectacular intersections, but down in that one zone, 16.35 over 10.5 meters. But earlier this year, we had like 4.48 over 57 meters. And for those of you who follow gold projects, these are, I think, probably the best of my lifetime, even though I've worked on some really good gold projects. So obviously, there's strong incentive to continue drilling, because we are going to be able to expand that Wenot resource quite substantially. And I just mentioned this deposit already has 2.4 million ounces. So I think our previous speaker mentioned that 5 million ounces is a real threshold for very significant producers and large companies looking for acquisitions. And we're certainly going to be reaching into that turf. So here you're just looking at a long section. Again, any of the purple dots are actually over 5 grams per ton. And as we all know, a lot of open pit mines, the average grade is 0.6, 0.8, 1 gram. This is going to be a very robust operation. And the other takeaway here, I would say, is the bottom left is a graph showing the grade and the number of ounces for each 100-meter slice as you go down. So you can see between 200 and 300 meters there, that's where we'd done most of our drilling previously. And in there, there's almost 1 million ounces, 973,000 ounces at 1.88. And then the drilling even lower, between 300 and 400 meters there, looks at it. We found about 726,000 ounces of resources at 2.15. So you can see the grade is getting higher. And this is before our most recent 20,000 ounces, 20,000 meters of drilling. And some of the results are shown there. I would highlight, we just last week put out hole 101. And if you look at those intersections, well, all 3 are quite significant. And those 3 zones are all in one hole, again, to the point that this deposit has multiple significant zones. So this is the other deposit, 400 meters away. You're looking here at an underground deposit, but again, very robust grades and widths. And we just put, so it's very compact. That's one of the things for underground mining. You don't want to do a lot of lateral development. So because this is within an intrusion, it's about 500 meters across, and the other dimension 275 meters across. So very cost effective from an underground mining perspective. So we did put our first drill hole in this deposit late last year, just before Christmas. Again, pretty unique. The hole was about 1,200 meters long. We were testing the intrusion because the mineralization is within the intrusion and within quartz stockworks within the intrusion. And so we were quite surprised because right down to the bottom of the hole at 1,200 meters was the intrusive. So that actually gave us, there had been the previous drilling to outline the resource, and the thought was, you can see the block model underneath, but that this actually extends a full 200 meters beyond that. Also, you can see 774 meters of mineralization in that hole, and including almost 200 meters of that was above 278 grams per ton. So we did a PEA for a super pit. This is, as I said, it's a little bit in the rearview mirror. We've done 20,000 meters in addition to this. We only did our PEA on the Wenot deposit. We did not include the Gilt Creek. We are looking right now at moving towards getting the updated resource on Wenot and then an updated PEA. That's going to be the expanded Wenot plus bringing in the Gilt Creek deposit. So this one looks at about a 9,000 ton per day operation. We're going to be moving to a PEA with 15,000 tons per day. And so this will take us from, in this one, where we're looking at about 142,000 ounces per year average, that'll take us up to that 250, 300,000 ounces per year. So stay tuned to that because I think that will be very significant to the market. So I'm just going to flip through to something exciting. As I mentioned, we were going to do a second hole into the Gilt Creek deposit. But if you look at that in cross-section, if we continue that, we will end up drilling deep under the Wenot deposit. And for those of you who know these orogenic shear-hosted deposits, you know, this one's subvertical. It's most likely it continues at depth. And so if we continue that Gilt Creek hole, we get to test the Gilt Creek deposit, and we want that, some of that information for rock mechanics and metallurgy for our upcoming PEA. However, we will also test underneath Wenot at about 1,200 meters. So I have done this before on another deposit. It worked out extremely well. So what it does is if we hit mineralization there, what that tells people is, you know, this isn't even a 20-year mine life. This is a 30 or 40-year mine life, and that's very profound. You can't bring that into resource. It's too far away. But basically that would provide significant upside to what kind of a mine life you would see here. Yeah, so I think we've described the program. We were started on a 10,000 meter program. We blitzed through that fairly quickly and expanded to 15,000. You know, for Wenot, when we are intersecting what we're seeing in those deeper holes on that high-grade zone, we're stepping out 50 meters to follow along on that because that adds very, very significantly to the ounces. It's almost like having a deposit within your deposit. So our drill costs down there are quite low, $185 all in. So we're on the road there. So our share price, we're trading at about 42 cents for a market cap of about 174 million US. So we're significantly undervalued compared with a lot of the peer companies that have been in the Guyana Shield. A lot of them have been very high profile, lots of M&A activity in that area. Reunion being the most prominent, Anglo has invested into G2. There's lots of speculation around that. But basically, you know, our ounces at 4.3 million ounces are not significantly less than Reunion's, although we have road access. You know, we have history of metallurgical recoveries and cleared site, and a government that very much wants to see this redeveloped. So I think that's our story.
And are there any questions in the audience? Just a question for B as to how is it to work with the government there?
Since it's such a small country, you get a lot of FaceTime with them. So no, they're very approachable, and they have a lot of priorities right now with the offshore oil. But it's surprising, their hearts really still lie with the gold industry, and a lot of them have experience in it in the past. But I mean, I guess the best example is I was in town in Georgetown a couple of weeks before Christmas, and I just was invited to some various parties, so I spent some time away from the project in town, and the second day I was there, the president's assistant called and said, President hears you're in town, or can you come see him tomorrow afternoon? So, yeah, you get they very much are interested in these large-scale gold projects. Yeah, there's accessibility all the time, and I would say, you remember this was the former British colony as well, so it was British Guyana. So their legal framework is very similar to what we have in Canada, and obviously Britain. But I think they aren't as rigorous how they apply it, but when they see projects that they want to see move forward, they're all in, right?
Just an example of my experience as well, as working with the ministers and government of small population jurisdictions is always so much easier than large ones. Thank you, Elaine.